Joined in studio by James Dion. He's president and founder of Dion Co. He's also the author of bestsellers within the retail space. Retail selling ain't brain surgery, it's twice as hard. Start and run a retail business and the complete idiot's guide to starting and running a retail store. Sounds like something maybe I would start off with, James, if I wanted to run a retail shop. Good to see you again.
Good to see you, Oliver.
You're becoming our Chicago retail expert, and today we need a retail expert. It's kind of the theme here. We saw numbers this morning that continue to not disappoint necessarily, but they're slower.
Yeah.
Really for the third month in a row. What's going on?
I think we in retail love to blame the weatherman. Okay. And in this particular case, some of it is the weather. It's also some that the tax cut really hasn't kicked in for most people yet, so they didn't get their withholding straight in January. Okay. Probably figured it out a little bit of it in February. The IRS was late in getting the tables out. So people really have not seen the extra dollars in their wallets. So they're really not, they're not out there spending it yet. And weather certainly has not helped.
But James, I thought you can order online if it's cold out.
Yeah, you can order online, but remember, online is still less than 10% of total retail sales. So, if it's difficult to order still. You can order a meal online, but you're more likely to go into a restaurant or a fast food place and get it. Yeah.
Now, the big numbers that we saw that I think were so encouraging were more September through November. We had those big retail bumps, even by a seasonal standard. Yep. We've also talked here on the show quite a bit, and I think everybody has across networks, about the amount of credit card spend. Where's the breakdown between those signals and what's happening now? Maybe it's part of the weather. Is it also maybe people are spending money on different things? I mean, what's the breakdown there?
It's an interesting thing. What we're seeing is, again, the cursed millennials. Yeah. They're simply not incurring credit card debt. Yeah. And so they're, being very wise.
They're taking out payday loans, apparently.
Yeah,
but in terms of credit cards, a little hesitant.
Cards, yeah, they're not into that. So that's a real problem. That's a real problem. In addition to their loving experiential types of spending. So that's part of it. Yeah. And people, I don't think there's a tremendous fear of debt right at the moment. I think there's a lot of optimism in the country. There's certainly the unemployment is making people feel good. People are going back to work. People are now hopefully starting to make a little bit more money.
Yeah. So. Is there a reliable sort of historical relationship that suggests maybe a lag time between things like sentiment and surveys? Because that's the other disconnect I see, which is no matter what happens, at least in the S&P 500, it's pretty incredible to see the way consumer sentiment and surveys remained very elevated, close to all-time highs, even after the market correction in February. Yeah. When then does that turn into actual spending that will show up?
Well, again, for most people, it's very simple things. Is my paycheck bigger this week than it was last week? And that's, for a lot of people, remember the number of Americans who do live paycheck to paycheck. Yeah. And so having a little bit more money, there is a lag to that. And I think some of that is really going to be coming. I think March is going to be a different story than February.
Okay, let's talk within the retail group as a whole. What I focused on this morning was the divergence that happened, at least from the market guys. If we can pull up that multi-line versus specialty retail chart. In the past year, James, a divergence in which multi-line companies have been rewarded by investors much more readily than some of the specialty companies. I personally was a little bit surprised by that. I thought the multi-lines were the ones with the big box stores that have problems. So far, they're holding up decently. What do you make of that?
I think, they've had a better ability to do this magical thing called omnichannel. And so they have been much, much better at integrating their web presence with their brick and mortar presence and really appealing to the consumer that way. And also the consumer, obviously clearly trusts them, because they can buy online, pick up in store, they can return to store, so they have a lot of that ability. And specialty stores really, they are specialists. So if one little thing affects their sector, that's a real problem for them. While the big box stores, as it were, have got lots of different opportunities to make it work.
There was really, I'd say between kind of 2015 to 2017, there were companies like Michael Kors and like Gap and like sort of those brands that were pricier, but then also not necessarily total luxury, but then not cheap by any means. Yep. They had to rethink. Yes. Gap saying, you know what? Put the brakes on Banana Republic. We got to focus on Old Navy. Michael Kors saying, listen, we got too basic, if you will, to borrow a millennial term. We got too available. We didn't retain our brand reputation. Is that trend still happening, or have companies figured out where they want to sit across that kind of luxury scale, if you will?
A lot are still struggling with it, and I think one of the real telling things, factors is, for example, that Nordstrom this year really became officially a discount retailer. That they now have more rack stores than they have full line stores.
Yeah.
The consumer is still looking for bargains.
Yeah.
And that's not going away.
Yeah.
And there are also brands that gave up, some of their cachet. They gave it up by going to mid-market, to available. UGG is a good example of that.
Yep.
And the consumer, is somewhat, and always will be, always has been fickle. I remember my years I worked at Levi Strauss. Jean jackets. We would sell every 4 to 5 years a ton of jean jackets, and they would it's a roller coaster.
Yeah.
Come in and out of style.
You mentioned Nordstrom. Another one we just saw from earnings was Ross Stores. I mean, a lot of these have kind of plateaued this year, but still those longer-term gains are very much there. Companies like Ross Stores and TJ Maxx. Yep. But even deeper into the discount are the companies like Dollar Tree, Dollar General. We're about to get one of those today, or rather the next 24 hours. I think it's the aftermarket here today, Dollar General. What do these companies need to do if the economy starts to strengthen? What do they need to do to retain that customer base that they've drawn in as the economy kind of stagnated and people wanted cheap things?
Yeah. Oh, that's that's a really good question, Oliver. Because yes, as the economy gets a little bit better, the customer wants to kind of upgrade their life too. I don't think it's going to be an all or nothing or a real issue or problem for Dollar General, because they can tweak, they can bring up their assortments, they can raise prices a little bit or bring in a little bit better goods. Okay. So they can really adjust to that.
Yeah, before the market opened tomorrow is what I was looking for. And they've also kind of tried to, some of these dollar stores have branched out a little bit, right? Yeah. My mom used to joke, there's the real dollar store, which everything was $1, and then there were the fake dollar stores. These are all fake dollar stores now. They can move prices around, right?
Oh, absolutely, yeah. And the consumer is used to that. They're really used to, and again, a bargain is a bargain. So even if they have to pay $1.50, $2, $3, $5, they really identify that as saving money, and that's what matters to them.
Takeaway from this quarter, how closely do you look at the earnings? How closely do you look at the profitability of these companies? Did we justify from their sales and their changes that they're making the excitement that at least Wall Street had about this group of retailers throughout the latter half of 2017?
Yeah, I think Wall Street always, quite frankly, overreacts to retail, and they, good retailers consistently will deliver. You look at a Crate and Barrel, you look at just Williams-Sonoma. I mean, you look at retailers who are consistently good. Yeah, they have their slight up and downs, but they will bounce back. They will figure it out.
Yeah. Find a way. James, Dion, great conversation as always. Pleasure to have you here back in studio.
Thanks, Oliver.
Great to have you. James is the president and founder of Dion Co. here in Chicago, and of course, the author of those best-selling novels. I need to check those out. It seems like I probably can learn something. It seems like some of these CEOs might be able to learn something too.